Welcome to another episode of Corporate CPR, where we breathe life back into your organization, projects, and processes, giving you insights to recovery and avoiding mortality. All right, we are going to start over. So let me wave so I remember. Welcome to another episode of Corporate CPR, where we breathe life back into your organization, projects, and processes, giving you insights to recovery and avoiding corporate mortality events. Today, we'll be talking about financial modeling for your organization, and joining us to contribute to the conversation is Ian Schnoor. Welcome, Ian.
Thank you, Jenna. It's great to be here.
I'm so excited to have you. Can you share a little bit about your background for our audience?
I would love to. And hi, everyone. It's really nice to meet you and thrilled to be here. My background is pretty simple. I started my career over 20 years ago as an investment banker, doing traditional mergers and acquisitions and financing work for large companies. I worked at a couple of banks, global banks. And then around 20 years ago, I started a training business to teach people how to build financial models. At the time, banks all taught their own people. So I was one of the guys at banks that used to teach the new class, the new cohort every year. And timing was good. And I started a business when nobody was outsourcing this training, but they all got wind of it. I'm in Toronto, but we teach all over North America, all over the world, a lot, mostly in North America. And at the time, people started coming to me and saying, can you just train our people? And that happened. So through the Marquee Group, we run training courses in modeling, valuation, advanced Excel, managing data sciences. So I wear one hat as heading up that organization, but I also head up another organization that was founded about 5 years ago called the Financial Modeling Institute. What that is think of it like an accreditation body, like CPA or CFA. We realized many years ago a need for real rigorous validation of people's financial modeling skills. So we've built an organization that does just that tests and accredits people in the field of financial modeling. So they're separate organizations, but I'm involved in both.
Fantastic. So I think, when we think about the topic of financial modeling, a lot of people might think, oh, well, that's for the finance department or maybe the strategy team. Who's impacted by this discipline?
Yeah, it's excellent. It's an excellent question. And honestly, nothing could be further from the truth. The reality is, well, let me simplify. If you work in any organization in some sort of a mid-level or leadership capacity, I'm going to guess that in some way, shape, or form, at some point during the year, you're going to be thinking about the future. You're going to be doing a budget or doing a plan or doing a forecast. If you are thinking at all in your role about what the future might look like, whether that's the next 12 months or the next 10 years, you're thinking about a forecast, and that means you're involved in modeling, because a model is what will help you understand what the future might look like. And we tell people that all modeling is forecasting, is building a really robust, dynamic forecast, usually in a spreadsheet, to help you better understand what the future might look like.
And so what are some of the key things to be thinking about then when approaching this, so that you don't kind of go off on the wrong direction?
Well, there's a lot. Do you have 8 hours? No, just kidding. We could go for a while. I mean, but let me start by saying, first of all, when it comes to modeling, it's a recognition that this is a discipline that anyone who's involved in thinking about their own business line, their own department, if you are involved in thinking about what the future looks like for your department, you need to have a strong model. Because as we tell people, models have become the number one most important decision-making tool in all of business. The vast majority of critical decisions that get made in business environments are made on the backs of financial models. And if any of the listeners today has ever seen an Excel spreadsheet that was a disaster, I don't know, can anyone relate to that? You've opened up a spreadsheet and you got a headache and you need to take a Tylenol or an aspirin because you couldn't follow it and you didn't understand what the formulas were saying. Jan, has that ever happened to you? Look at a spreadsheet and you think, what the heck is going on here? If that's ever happened to you, that's not a strong model. That's a problematic model. But the issue is and so many of the forecasting tools that people build are difficult to use, difficult to understand, filled with long, hard to follow formulas, often filled with mistakes. And because of that, it makes it really difficult to make optimal decisions on the backs of those. And if you can't make optimal decisions effectively, you're going to run into trouble. You're going to have trouble with your organization, with your business, because of that. So we could start to talk about some of the ways to ensure cleanliness, simplicity, organization, rigor. I mean, we promote all of those things, both where I teach through the Marquee Group at our business, and that's what we're doing at the FMI, is making sure to accredit people, they understand how to do this in a really elegant, clear way.
And so, I guess a lot of, the pieces that come to mind for me are when you're trying to, like you said, set your budget for next year or understand what your sales forecast might be. So
Right.
let's talk around a little bit about budgeting, because I think that's one of the ones that probably goes across most departments.
Sure.
So, it's let's say mid 2022 and we're looking into 2023 and I'm having to build my budget. What are, like, I would say probably most of us would take our old budget, copy or file save as next year, and then tweak a few numbers. But is that the right thing to be doing?
Well, there's nothing wrong with that approach, but it's predicated on a few things. There's nothing wrong with rolling forward a tool. In fact, we teach people and we share with that all the time. There's nothing wrong with the idea of having a nice, elegant tool that can be rolled forward, but it's predicated on a couple of major premises. Number one is that it's been well planned to begin with, that it was well designed and well planned to begin with. And we always tell people that if you're going to build a strong model, the very first thing you should have is a really strong plan. I always ask people in a class, what's the very first thing you want to do when you build a model? And I get all sorts of people throwing out ideas, and rarely do they say which is what I want to hear, which is turn off your Excel, shut it down, and build a plan. Get organized. Modeling is the absolute best way to ever understand, to really understand an organization, a department, a business line, because it forces you to think about all the elements of that organization, their revenues, their costs, the way they work, their working capital, their debt, their equity, whatever it is, their fixed assets. So we always encourage people to ask a lot of questions before they even start, so that you get really, really smart. So if you're not smart about the whole business to begin with, then simply rolling forward last year is just not going to help you that much. I want to make sure that I am very intimate and understand how the different drivers and pieces come together. And secondly, rolling something forward also presupposes that it was well designed mechanically to begin with. I mean, if it's a disaster to begin with, then that can cause problems. But if it's nicely organized, well designed, and easy to roll forward, then that works. But that very often those two things are not the case in many instances.
How, do you find that organizations may not be forward thinking enough when it comes to their financial modeling? And let me just give you an example. In the project management industry, obviously we do project forecasts. And you're usually confined to the calendar year. So what often happens on the project is you're, let's say, given $1 million for the year. It's not enough because it's a multi-year program, but you don't know what you're going to get next year. Is that common and pervasive throughout organizations? And is, should they be approaching financial modeling not just based on a calendar year?
Of course. Yeah, absolutely. The simple reality is that if you are looking at a project, and we can distill this very simply, any person who ever has to evaluate a project is going to have to defend or justify the rationale or the existence of that project. And what all organizations will do is use only a couple different metrics to evaluate that. One being an NPV, right? They, at the end of the day, if a company is going to spend $1 million in a new project, they want to make sure that generate some positive return. Will there be some positive benefit? And they might measure that in the form of payback periods or in terms of NPV or IRR, or there's a couple other metrics. But at the end of the day, we're trying to say, what are we spending as an organization and what are we going to get back? So a good modeler has to be able to understand the time period. We refer to that in modeling as the periodicity. What is the appropriate periodicity that it's going to take me to justify the return? It's very unusual for any project to generate a strong positive return within the first year. So the modeler, and this is where I get back to planning, has to say, how long is this project going to take? How far into the future do I think I need to forecast to understand cash flow implications, return implications? Is it 1 year, 2 years, 3 years, 5 years? It's very easy to set up time periods initially. It's actually very difficult to make changes to your timing down the road. Other things like, do I need to be able to evaluate or measure anything in this model monthly, quarterly, just annually? These are questions that are easy to ask and they don't take very long to get answers for. But if you do it wrong, if you model it incorrectly to begin with, then you're going to have trouble. If you model a project annually for the next 5 years, and then you find out, oops, when you're done, your whole team wanted a monthly forecast or quarterly, it actually is very difficult to go back and change that. And vice versa. So it's very important to understand how long into the future do we want to go? What level of granularity do we need in terms of timing? Do we want to see monthly? Is there seasonality we have to capture? And these all come through asking good questions. And you know what? When you ask those questions and you show up to present, you look very intelligent and very insightful because you have been thoughtful about how you deliver what people want to see.
And so, how do you know whether or not what you have is a good model then?
Oh, that's an excellent question. How do you know if what you have built is a good model?
Yeah, or what you're using that somebody else has built you.
That is an excellent question. And I pretty much start every session I ever teach with that exact question. How do you know if a financial, it's like I asked you to ask that. I didn't. Like she knew.
But you did, so
I didn't. No, look at that. She knew. How do you know? And everyone should know. How do you know if a financial model is working well? So now we know, first of all, we've cleared the air here. Everyone should understand at this point that a financial model just means it's a forecast. But typically, by the way, typically when people build forecasts at organizations, they do it in one of two different ways. They either do it in a spreadsheet. And if it's a spreadsheet, it's usually Excel, although we're seeing more and more usage of Google Sheets and others. But when you build forecasts, it's either going to be in a spreadsheet, or some companies use what I call them black box software. It's a piece of software. You enter all your inputs up front and it spits out the result. You can't see anything. You can't really look at the formulas. And there's pros and cons of both. We, of course, are proponents of spreadsheet-based forecasting. If you're using a black box piece of software, there's not that much you can do because you're not allowed under the hood anyway to see what's happening. I assume that we're talking to people here today that do use spreadsheets and they're building some of their own tools to play with. So how do you know if a spreadsheet-based forecast, if an Excel-based forecast is working well, which is your question? Two ways, two criteria, and that's it. A good model has to work well in two ways. Number one, it has to work well electronically. And when I say that, what I mean is every formula has to make sense. So imagine, Jana, you were my boss and you said, Ian, I need you to build a model for a project. I need it in 2 weeks. And I sent it to you in 2 weeks. And you opened it on a Saturday afternoon at your house. And you opened up the model on your screen and I wasn't there. You should be able to click with your mouse, go cell by cell and understand exactly what I've done. You should say, yeah, okay, this formula makes sense. Yep, it makes sense. And as you work your way down formula by formula, you can say, yeah, it's like reading a story. And by the way, we always tell people that a good model has to tell a story. So you should feel, just looking at my formulas, that every single formula flows and it's logical, and you say, yep, I understand this calculation. I'll ask you quickly, have you ever seen a formula in a spreadsheet that was so long that it wrapped around and it linked to 6 other sheets? I'm sure you've seen that.
Or it references so many cells that you can't figure out which cells it's referencing.
And you start yelling. You don't have to tell me exactly what you said, but people start yelling and screaming. They get annoyed. They get frustrated. They get frustrated because they can't understand and they feel like they should be able to understand, and they should. I'll tell your listeners, if any of you ever sees a formula in Excel that you don't understand, it's not your fault. It's the builder's fault. It should have been built in a way that allowed you to read it and go, yep, I get it. I understand. Every single cell makes perfect sense. So you asked me, how do you know? And I will tell you that the first way to know if a model works well is it works well electronically. Every formula flows, is fairly simple, and it's understandable, and people can understand and follow what you're doing on the screen. The second way that a good model has to be able to work is on paper or as a PDF, because even in today's day and age, where we're all electronic, the vast majority of decision makers out there are not going to want to poke through an Excel spreadsheet to understand if something works. They're going to want to look at a printout. Now, we used to actually have, remember when we used to get together in person in meetings. So in those days, we would bring, on our team, we would bring printed paper copies of a model and walk through it every page, and there's no spreadsheet in sight. Now we have to PDF it and we send someone a PDF. But my point is, if I've ever been involved in a project to present a project or to try and propose something, we don't usually even build PowerPoint decks to supplement it. The model is our tool. The model is our presentation, which means when I hand out a model, there's going to be a cover page. We always talk about optimal model flow. So the model will have a cover page. It'll have an executive summary that summarizes the key outputs that the reader wants to see. Then we will get into assumptions and all the inputs. It follows human logic. What a person wants to know whenever they look at any model, it doesn't matter what industry you're in, what country, it doesn't matter. If someone ever reads a financial analysis, they want to know, well, a cover is nice. What are we talking about? What are we dealing with? What project? Then the next thing that they want to know is, what's the answer? I promise you, the first thing a senior person wants to know is, what's the answer to this entire project? I don't want to have to go to page 20 to figure it out. What's the answer? And then, of course, this, as soon as you summarize the answer and show someone the various answers, the next thing that they, of course, want to know is, great. Now, how did you get there? What decisions did you make? What critical decisions did you make to get there? And if I'm in a meeting, I'll say, that's great. Let's flip the page of the model on paper, and I will walk you in a very beautiful way through all of the assumptions. And they might be nicely summarized in boxes, organized clearly. So I have all my fixed asset assumptions in one spot, all my debt assumptions, all my revenue assumptions. And the reader will be able to say, yeah, I like this. This is too high. This is too low. Can we tweak it? But they understand exactly how we arrived. And from there, it just flows. So we could flip page after page, and the reader will feel like they're reading a presentation, and it will all make sense. And so those are the tests. Those are the only tests. How do you know if a model works well? Every formula will make sense. And if you print it out, well, first of all, if you can't print it out, then you're really struggling. But if you can print it nicely on paper and someone can follow it along by flipping, then yeah, it's going to hit a pretty high bar. And most models do not succeed on either front. Never mind on both.
No, you usually have to read the person's mind, right?
Read your mind. Or you need them standing right beside you for 6 hours as to explain exactly what they meant in every cell. Right. Not ideal.
So, this conversation makes me think, well, great. You have a nice model, whatever, but it's still junk in, junk out. So now what do we do about that? Like about the data going into the model?
Yeah. Excellent question. That garbage in, garbage out is classic. I can control the garbage out. And what I mean is I can make sure that the calculations don't have errors if we are building and designing cleanly. So sometimes I like to think that garbage in, garbage out almost means two different things, because you can have garbage in, garbage out. You can have good stuff going in and garbage out, and you can have garbage in, right, and good stuff. So the point is they don't have to be the same, meaning you could have some very good assumptions, but if there's errors in your calculations and formulas, you're going to get incorrect answers coming out the back end. You're going to get garbage on the back because the calculations, the logic didn't work well. So as a strong model builder, we need to achieve both. We need to make sure that we've got, I don't know, what's the opposite of garbage? We always talk about garbage and garbage out. No one ever talks about the opopposite of that, which is, beauty.
It's accurate data, and that's
accuracy or beauty. Now let's be clear here. I would never say, as a model builder, I would never say that a good model allows us to perfectly predict the future. No one's expecting we can predict the future with certainty. If you could predict the future, I would hope you have some other job than what you're doing now, because you'll make yourself billions of dollars if you can perfectly predict the future. No one expects we can predict the future. What we want to do is create confidence and improve and enhance decision making. So garbage out can be controlled by building a well-designed model where the calculations are working. Garbage in relates to the information that goes into the model to begin with. And that can heavily be managed and controlled by the model builder by asking good questions, by planning. I always tell people that as a model builder, It's not my responsibility to make up the assumptions. It's my responsibility to figure out what do we need to make assumptions for, and then go collect the data. So as an example, I need to understand what will the capital expenditure forecast be? How much money are we going to spend on new additions of fixed assets? Well, I'm not going to make that up, but if it's a project that we're dealing with, I will talk to the engineers. So it's my job to ask the engineers, ask the CFO, ask the treasurer, hi, everyone, what do you think? Give me your thoughts on what will be the right capital plan. And then I can say, are you sure? As my job said, are you sure? Is it really $1 million? Is it not going to creep up to 1.2? And I'll push them on it. And they'll say, no, we're pretty comfortable as a team. We're comfortable using, because we've done this before and we got some quotes from the suppliers and we're pretty sure. And then I might build in a lever to go up and down 20% to build in some flex. But when I present it to them, or ultimately to the decision makers, the board, we will be able to say, listen, it was Jana and her team who gave us this. They did some research and they're comfortable with $1 million of the capital plan. And the same thing when I choose tax rates, when I use inventory days, revenue day, receivable days, when I talk about things like sales volumes for revenue, it'll be, well, Jana and her team have done this 5 times, and this is what they think is a reasonable ramp up curve. And we've used that. And they'll look over you and say, Jana, are you comfortable with that? And you'll say, yeah. That's right. That's what I provided. So the model builder is really facilitating the information flow to talk to people and collect data as best we can. But like I said, there are some assumptions, and we refer to these assumptions as the key drivers. The key drivers are the most difficult assumptions to forecast that you and no one else can forecast. So for instance, your factory is in the US, but you sell most of your product in Asia or in Europe. So you've got major exchange rate fluctuation. I'm going to recognize as the model builder that we're going to have exchange rate fluctuation. We're going to assume that your product is sold, let's say in euros, and have to get converted back to US dollars, which means I'm going to need a 5-year exchange rate forecast. Well, I don't know exactly what that will be. Neither do you. Neither does anybody. But what we will do is we will intelligently download some research forecasts from a bunch of economists all over the world and say, listen, as of today, this is what people think the euro and dollar exchange rate forecast will be. And I will build scenarios around it to say, well, if it goes up, if it goes down, what will that do to our project? But at least we can look at the CEO, the board, and say, we were very careful and intelligent about the way we collected our data. We might end up being way off, right? In 5 years, we might say, wow, I can't believe we forecasted that for the exchange rates. It ended up being nothing like it. But at the time, we did the best we could and we picked the best data we could. And then of course, things change. So
the pandemic would be a perfect example where you couldn't have planned exchange rates.
That would have been a perfect example where you couldn't have planned growth rates. You couldn't have planned exchange rates. You couldn't have planned turnover. And, you build in these extra special events sometime. I mean, most people, struggled with forecasting around it, but you get the idea, right? Is all you want to be able to do is save face and say, we did our diligence. And based on the best information we have at our disposal today, we made really good decisions. And we hope that those decisions will help us understand what the future could look like under a base case, a best case, a worst case scenario.
Do you have any stories or anecdotes that might help people understand what happens if you, either aren't using models or using poor models to make decisions and then make bad decisions?
Yeah, I mean, we see it all the time. We see it all the time with our clients that we teach, that we work with. First of all, anecdotes can be more psychological. Enormous stress. People experience enormous stress and uncertainty during an entire planning process. They feel tremendous unease when you don't understand exactly what's going into a forecast, and if you don't really understand how a change in inflation is a good one now. And we've gone through such minimal inflation for the past 10, 20 years. There's been almost no inflation. We're approaching an era where we might end up with some pretty high inflationary times. We don't know exactly if that will happen. And if it does, how long will it happen? But imagine. So again, I'm not saying that we have to perfectly predict what inflation is going to be, but I want to be able to go to my boss and say, listen, if inflation hits 5% or 6% a year, here's what the implication will be. We're going to see some revenue growth because pricing will go up. Our costs are actually going to go up a little faster, which means we're going to struggle so we're going to have to do some cutting. We're going to have to do some headcount reduction, maybe give up some office leases because this is the mitigation plan if inflation goes up, because our costs will go up higher than our revenues. But if it ends up just going up and then down again, within a couple of years, we'll be okay. So what it does is it gives me comfort and insight that if this future unfolds, I know what levers we can pull and what things we can do to get back on track. And if something else happens, I understand what the implication will be. But in many instances, people don't understand that. They can't appreciate. They've never been able to fully grasp, wow, if inflation hits 10%, what's that going to do? We have no idea. And they don't really know how to think through it. So it happens every single day. I don't have specifics, but we see it all the time with our clients, the inability to capture future scenarios into what that will look like to their own businesses.
And, I guess when you talk about that, it's like, there might be a little bit of maybe people don't even know what questions to be asking. So, right. Do you have recommendations then on how you even approach that planning? Because, if I'm planning, I wouldn't even think about planning inflation into my
right.
next few years. So how do I know what questions to be asking?
Well, that's an excellent question as well. Partly it comes from experience of doing some planning, but partly it comes from just knowing a business line. First of all, the most important thing I would say is don't be afraid to ask questions. It's often people are afraid to ask because they think that they'll look dumb, like they should know the answer. I got to tell you, when I ever get involved with a new client or with a new project, and I've probably built over 100 models, my favorite part is showing up at a meeting and asking what might sound like dumb questions and just showing up. And you know what happens every single time I show up and I ask, and I'm sitting around a group of senior managers and I ask questions that they might know because they work there and I don't, and they might sound like dumb questions. But every single time I do, what happens is some person provides me an answer on the team, and then someone else looks up and says, no, that's not how it works at all. We do it this way. And then they get into a bit of a squabble with each other. And I just sit back and I say, you guys figure it out. You tell me. I asked you how this sort of machine works or what's the life of X. And you gave me two. So you guys, how do you want me to model this? And that's a great job of the model builder, is to make sure everyone is aligned, to challenge people's conventional thinking and assumptions of how things ought to work. And you know what happens? The model builder, by the end of the process, becomes the most insightful, often the most intelligent person about the project. Because think about any business. Most businesses are very siloed, compartmentalized. You've got your tax expert. You've got your accounts receivable specialist. You've got your salesperson. You've got a marketing person. You've got the treasurer who deals with the debt. There are not many people within any company, any organization, who have a really good grasp of the whole system, of how everything integrates. There are very few people who know that. And even the biggest companies in the world, a model builder has to do that. A model builder has to collect data from sales and marketing and from revenue and from product and from treasury and from tax and from operations and HR, and pull it all together. And so you end up with this very unique lens because you understand how all the pieces talk to each other. So you have to, first of all, be not afraid to ask questions. Don't worry about sounding dumb. And then I would say, how do you know the right questions to ask? Think about your project. So, there's actually not that many. If I'm thinking about in my planning, this is where good planning comes in. You can say, what has to happen for, first of all, one question that's easy is, if we're going to do a project, what's it going to cost? What will be the initial cost outlay? Well, my engineer told me it's going to cost us $1.5 million to buy this machine or whatever it is. Okay. So the initial capital going in, and then I have to think about, just think about the business. What do I have to understand to know if this is a good opportunity? I need to know how much I'm going to spend. I need to know, I guess, what my revenue or sales might be on the back of this project. And then, of course, what kinds of costs will I have? And you can learn as you go. You can start asking what kinds of costs will there be? Will there be labor costs? Will there be raw material costs? Will there be energy costs? As the modeler, I don't have to know the answers, but I have to be able to push until people help me understand. Will there be income tax implications, debt and equity implications? My planning stage will help me understand all the pieces I need to think about to know what's involved and what will the future look like. And then I can get to work and think about forecasting.
So let's for the last kind of question, let's take a look at more from
Mhm.
an executive perspective. And
Yeah.
here's when you're talking what I was thinking about. So oftentimes in the work we do with project management, somebody writes a business case
Right.
and says, here's what we expect to spend and here's what we expect the return to be. And then an executive makes a decision based on that. And
Right.
being behind the scenes, and being the one who gets the business cases and talking to these teams, they're like, we just made it all up. So, or they make the numbers fit what they want to say, maybe less on the cost side because, you've got estimates for that. But on the value side, nobody really knows how to do that very well. Like lay people, I should say, right? Like just your average, person in a department might just be like, I
Right.
think we'll get, our recruiting will improve by 50% or
Sure.
something.
Yeah.
So how as an executive do I, when I'm getting these business cases across my
Yeah.
desk, ask the right questions and make sure I'm making the right decision?
Yeah, no, that's excellent. And one of the simple realities that's called experience. It's called none of us. I mean, there's a reason why you're not hiring high school students or first year. There's a reason why we're not going to hire a first year business analyst to build the full forecast all by themselves and then present it to the CEO. There's something called experience. There's something called right insight into a company in an industry. What I would expect, what I will always ask as a senior, if I'm a senior person, is how did you get there? How did you come up with your? I don't expect. I don't. I will never. We might not hit our targets. It happens all the time. Every company sets targets and then they hit them. They don't hit them. They're short. They're an X. Almost nobody hits exactly their targets every single year. It's just that it's a target. But what I want to know is how did you arrive at it? And if the person who did it comes to me with an intelligent view, such as, okay, I've seen us as a company, launch similar products on these 5 instances in the past 10 years. We launched 5 similar, and they were all a little different, but they all had some similarities. And this is what ended up happening in these 5 cases. So I gleaned some insight, and I'm making some assumptions, but I think that we can do X, and I've got some experience. Or I saw what our competitors did, or I have friends that work in the industry, but I'm using some of my insight and experience to help drive somewhat of, or I've looked at the market, or it's a new product and I've looked at the market size and I believe that the market can sustain 1 million units of this and we're only forecasting 25,000. So I believe that there's room. It just needs to feel to a management team like you have made an educated assessment with some reasonable research and grounding to how you arrived there. And again, you may be way off, but that's okay. It's more about how did you arrive there and how can you justify that to your senior team so that they feel comfortable that, that it is a reasonable starting point. And then, as I said, not only will you then do that, but then you'll, of course, sensitize up and down to say, if we hit it, the NPV will be X. If we are way above, it's even better. If we're way below, then the NPV, and then I would recommend, if it looks like we're trending way below, I would recommend we cut it off after 2 years to minimize any future, whatever the case may be. But at least I have good insight into, I've got some data-driven insights.
Yeah, no, it makes sense. I think the answer to my question is go hire more experienced people who are doing your business cases.
Well, maybe someone's got to know something. Can I tell you
yeah.
something? Almost any project you ever undertake, someone in the company or in the world or in your community has done something similar at some point. There is some way to get some comparative data.
Yeah, derived from it. Well, this has been a really interesting conversation, Ian. I'd love to hear maybe your top 3 things you want to leave with people, either that we've already discussed or maybe something we haven't touched upon yet.
Wow, only 3. I thought you were going to say 30. Yeah, top 3 things that I would say. Well, I guess one thing I would say is everyone is involved in modeling. because if you are in any way thinking about forecasting and planning, so maybe it's not everybody, but if you are in any shape or form, if you are required or expected to think about the future, then you need or should come into the world of modeling, because a model is just a way to use discipline to end up with a very rigorous, thorough forecast of that. So don't be afraid of it. It doesn't need to be difficult, but it requires you to, so modeling is sort of ubiquitous. Modeling, it touches everyone in business because it literally just means thinking and understanding what the future might look like. And how can we therefore take decisions that optimize our chance for success. I would say don't be afraid to ask questions. The most important thing for any good model and forecast is to plan it. So, that means maybe spending an hour, maybe 2 hours, sitting down and saying, what variables do we need? Who do I have to talk to? Whose phone number am I going to put beside that? And saying, hey, Jana has given me the data on income tax rates. And so here's her number and email. If anyone questions me on that, it came from this expert. So don't be afraid to ask questions. Don't be afraid to look dumb. There's no way that any one person knows every detail. So don't be afraid. That's the discipline and the skill that a modeler brings, the comfort, asking questions and bringing everybody together. So don't be afraid of that. And then I would say, remember that if you've done a nice job building a forecast, it will be very easy to follow every formula. We never want to see huge, crazy long Excel formulas. Every formula will be flow, and it'll be a simple couple cells, step by step. And again, in a lot of our courses, a lot of our webinars, we actually have a free webinar on the FMI, right? I talked about the Financial Modeling Institute, but on the it's fminstitute.com, and we have a free 90-minute webinar that I've led and people can sign up for. It's offered all the time on top 10 financial modeling best practices. So if anyone's actually interested in hearing what some of the best practices are to achieve simplicity and achieve really clean, elegant models that build confidence, you're welcome to listen to that free of charge. But yeah, so a model has to work as a powerful electronic tool and on paper. A model has to tell a story. I always tell people that maybe the most important skill for anyone in business and finance is the ability to tell a story, because decisions get made collectively. If you're trying to pitch a new project, well, your colleagues are trying to pitch the same senior executives, and resources are limited, right? Every company has limited resources, and they want to pursue the projects that seem like the highest chance of success, and they want to pursue projects with project owners that convey confidence. Yeah, Jana is someone that maybe she doesn't have the highest return in her numbers, but we are very confident that what she shows us, she's going to achieve. Whereas that other guy, Ian, he's presenting this really strong forecast, but he's a bit flaky and he always seems to miss, and it's not clear what he's doing. So we're going to redirect resources to Jana. If you build confidence and can tell a story with clarity, that will really help and give you great insight. So those are 3 things I would say that people can think about. If it's something people want to learn about in terms of technical skills, they can find us or find me. We've got on the Marquee side all sorts of training to help people improve their modeling skills. And we also have resources at the FMI that people can look at if they're interested in this as well.
It's fantastic. Well, you kind of answered my last question, but is there any place where people can find out more? You've mentioned the Institute, but anything else you want to mention there?
Yeah. So the training business that I started, it's called the Marquee Group. It's themarqueegroup.com, and we have live courses. Everything is still virtual right now on Zoom, but we also have a library of self-study courses that are really well received all over the world. You can check those out and we have courses on valuation, on modeling, on Excel, all sorts of great Excel skills. But through the Financial Modeling Institute, again, that's the organization to truly validate and test people's skills so that you can know that they have excellent modeling skills. But we've got a bunch of free resources, and there's some free webinars that people can watch if they want to just see. We're trying to help drive discipline. Our mission is to turn to create awareness that financial modeling is its own discipline. We want to build a global discipline so people recognize it's a respected practice and discipline in the same realm as as managing money or as being an accountant or a lawyer, because it does have its own all sorts of skills and discipline around it. So feel free to check those out. People are welcome to be in touch with me directly. I'm always happy to hear from people. If you have questions, my email addresses are on our either website. You can find me again. It's Ian Schnoor, and I'm always happy to chat.
Well, thank you so much for your time today, Ian.
Thank you, Janet, for having me on. Thanks everyone for listening. It's great to be here, and it's been a thrill chatting with you.
All right. And to our audience, until next time, keep your organizations healthy.
Hey!